Hello and welcome to Chartbusters. Well, we started off a bit on the back foot today. The first dip was spot. However, as we speak, we're hovering around the 17,900 odd mark. What's good to see is that still there are more stocks advancing than declining. The advance decline ratio is favoring the advancing stocks 2:1. Hey, Mangalam.
Hi, Nigel. Par for the course, I would say, after a 12-day rally that we've seen on the Nifty. The FI is buying for almost 13 straight sessions. So looking not problematic, so to say. The Dow also snapped a 5-day rally. So let's see whether we find support or not. I mean, the way the markets have moved and the way the broader markets are, it looks like support is nearby itself. It is the weekly options expiry. So let's take a look at all the top stories that we're tracking today. The pharmaceutical stocks, they've been under pressure. Dr. Reddy's is the top Nifty loser. Cipla Sun Pharma also correct after the ranitidine settlement in the United States spooks pharmaceutical stocks. Concerns over pricing pressure in the US and Joe Biden's law to lower prescription drug prices also weighs on the sector.
And the RBI releases a discussion paper inviting feedback on lower merchant discount rates for digital payments. A lower MDR would be a headwind for SBI cards and other credit card companies.
So now BLW slips over 4%, now down 3% after a big block deal where nearly 17% equity changed hands for a price of 510 rupees a piece. We have PE firm Blackstone likely to have sold about 13.6% equity in the company, sources tell.
Power Mech Projects is higher in trade after it bags a 6,000 crore rupee order from Adani Group. The stock is flying away. The management will be joining us in just a bit from now. Well, though the headline index is down, marginally only around 40-50 points odd, but from the broader markets, a few stocks are doing very, very well. Pull up the intraday chart of Repco Home Finance. That stock is flying away as we speak. It's up more than 10% or thereabouts. A big move being seen out there. The other one we're looking at is, just pull up with Zomato. Remember, at around 40-45 rupees or plenty of pessimism in the stock. From there, that's in less than 2 months, the stock has given you returns of close to around 50% odd. So risk-reward seems to have favored the stock at lower levels. But how do you trade the index? Well, Ashish Kayal joins us to tell us exactly that. Hi, Ashish. Morning. Well, a bit of an off day to start trade at least. The kind of flows that we're seeing from the FIs, I don't know whether or not we could even see a deep correction, but you can't rule out anything. How would you trade the index from here on?
Hey, Nigel, morning to you and Mangalam as well. See, the overall tone for the market has been bullish for quite some time. In fact, if you look at the past 13 days of trading sessions, not a single close has happened below the prior day's low. Even if there was an attempt to break the low, but index at the end of the day did not close below the prior day low. So that's going to be a very important factor. If you are a trend following guy, you need to follow that strategy and you need to keep riding the trend right now. The prior day low, if you look at it, is around 17,830. If today we manage to close below that, then we can expect some consolidation. I'm not saying correction, but some consolidation can't be ruled out. And short-term indicators are overbought, so we can expect a range-bound movement. As of now, I think if 17,850 is broken, then we can have a very small trade over here for a 60 points on the downside for a move towards 17,790, maintaining that 18,000 as a stop loss. So that can be a short-term trade for intraday that someone is looking at the index. But look at Bank Nifty. Bank Nifty has sharply outperformed. Even when index is consolidating, Bank Nifty is still taken out the highs of the prior day and is sustaining that. So Bank Nifty is something that I'm going to keep a watch on and use dips on Bank Nifty as a buying opportunity for the target of on the upside crossing about that 40,000 level.
All right, we take that point. Nifty Bank is a better bet right now than the Nifty itself. Individual stocks, we have a lot more stocks gaining than losing today. Ashish, what do you have on your list?
The first stock is from the banking space is Kotak Bank. This stock has been consolidating for quite some time, and today it is looking like giving a very strong breakout on the upside. The volumes are good. The stock has formed the base and possibly starting the third wave on the upside. So Kotak Bank, one can create long positions here, keeping a stop loss of 1800 for the target of 2000 and possibly higher. And the next stock on the buy side is going to be Dixon Technology. If you look at Dixon Technology, again, after it formed a classical triangle pattern and giving a breakout on the upside now, and the target of the pattern comes to around 4,400 and much higher. So one can create long positions in Dixon, keeping a stop loss of 3940 for the target of 4,400.
All right, thanks a lot for that, Ashish. Speak to you in just a bit from here. Let's shift focus now to a special segment where we get you ideas for profit coming from our colleagues at Money Control Pro. Jitendra Gupta joins in with a stock that he's been tracking. Jitendra.
NTPC once again is in the limelight. We have been saying there is great value considering the strong dividend yield and attractive valuation. Moreover, the management has suggested monetizing its renewable assets in the current fiscal. Recently, the company was in news for looking to start fundraising for its renewable assets housed under a separate subsidiary. It has plans to raise equity and list the subsidiary separately to unlock shareholders' value. The street estimates suggest that these assets are worth between 26 to 30 rupees a share and would offer much higher value post-listing in the light of growth, expertise, relatively higher IRRs and attractive cash flow yields. Meanwhile, if you look at the core generation business, it continues to deliver strong growth on the back of high generation, easing coal issues, new capacity addition, and of course, strong demand for the power. During the June quarter, the company recorded almost 44% growth in revenue and profits grew by almost 15% on a year-on-year basis. Stock is trading at around 8 times its fiscal 24 estimated earnings and offering a dividend yield of close to 5%, which is quite attractive in the light of strong earnings visibility and of course asset monetization plans.
Okay, all right. Thanks a lot for joining in and giving us, all those details and covering that stock. That's NTPC. Well, we'll slip into a short break, but as promised, we'll focus on PowerMech.
Welcome back. As promised at the top of the show, we have with us the management of PowerMech Projects. The stock, remember, is buzzing on the back of a new order that the company has got from the Adani Group worth 6,000 crore rupees. It's an order in the flue gas desulfurization or FGD business. It's close to around 6,100 odd crore rupees. We do have with us Mr. S. Kodandaramaiah, who's the Director of Business Development at PowerMech Projects. Thanks a lot, sir, for joining in. Before we talk about this order in particular, can you tell us a little about the FGD space? Is it the first time you've got an FGD order, and how big is the FGD potential in the country? At the same time, who are the other players? What's your capacity to service these FGD orders?
Yeah, it is part of the power sector business. In fact, power sector, because of the coal-based units, importance is coming down. We had a lot of presence in the power sector business up to 90%. Now we are reduced to about 50-55%. But this is a substantial booster for power sector business, both in the domestic and international market. And in fact, the FGD total business potential in the country is for about 169,000 megawatts. Out of that, roughly you can say, including these orders, what has come out, about 88,000 megawatts have been ordered in the market. And Adani Power and Adani Group, we have got a long-standing relation for about 15 years, working in various sectors, power, infra, material handling, mining, etc., and operation maintenance plants also. For this, this should substantially help us in consolidating our business in the power sector business, and that is our core strength, because we have got a huge presence in installing, in providing installation support about 68,000 megawatts.
Right. Mr. Kodandaramaiah, what is the cost per megawatt of FGD? You said there's 1.69 lakhs.
Can be around 73 lakhs per megawatt.
Okay, so
the EPC cost. So that excludes the development cost and the IDC cost, interest.
So the total potential, I think, is around 1,50,000 crores. Very, very, approximately
1,69,000 is the total
megawatt.
Base has to.
Yeah, in value terms, I guess it'll be around 1,40,000 crores approximately. If you
out of that, more than 50% has been ordered in the market.
Okay, and do you see scope that you all can bag more orders, this FGD business?
Actually, these are all retrofit jobs for a specific purpose of reducing the sulfur dioxide in the flue gas discharges of the coal-based plants. And as per the Central Electricity Authority guidelines, these 169,000 megawatts have been identified, and the projects are to be commissioned up to 24. That is the mandate, right, because this is part of the global commitments for our emission control. And this will substantially help in reducing the sulfur dioxide emissions with a recovery efficiency of 90%.
No, so we get that point. Of the 50,000, 60,000 crore worth orders which are pending right now, how much do you think you can get up until FY24?
Maybe, see, this order is a quite a big order for us. We'll be busy with these orders. Maybe we'll be looking for another 1 or 2 orders, maybe another 2 to 3,000 megawatts.
Okay, so that's another 2,500 crore worth orders that you're looking at.
Okay, all right, we got that then. So you've given us a fair understanding about how the FGD business functions. Now you're saying that you can execute this order in the next 30 months or so. So in FY23, will some part of that reflect? And if you could guide that for us in FY23, how much will reflect, and 24 and 25 as well. Give us a sense on that front, and also what are the margins on this business?
Yeah, you can say around 11 to 12% EBITDA margins.
Okay, and how much will reflect in this year out of the 6,000 crore order?
Yeah. Actually, based on the present order backlog, we have got a plan for a revenue plan of 3,500 crores. And perhaps, the first year of the order should boost up about 10 to 15% should boost up. Therefore, our total revenue for this year should exceed 4,000 crores from the last year revenue of 2,728 crores. That is plus 40% this one. And that is also driven by many of the existing projects in power, infra, operation maintenance, export jobs, etc.
Yes,
sir. This will be an add-on job, and this is our core competence in putting the power side.
Okay. So let me come in, sir. So let me come in here. So earlier, I think you were guiding for around 3,500 to 3,600 crores. Now, post this order win, you're saying that you will do in excess of 4,000 crores for this year. Are we getting that correct?
Yeah, plus 4,000 crores.
4,000 crores plus is what you're going to be doing in FY23. And what would the blended margins be for the company? Last year, you did around 10%. You were guiding that you'll be seeing margins move up, say to the vicinity of around 12 to around 13%.
Absolute terms, it will move up. I think 11.18% was the EBITDA margins, and we expect it should be between 11 to 12% in this year based on the blending and the product mix and service mix we are going to undertake in this current year and the coming years also. Therefore, those margins we will be maintaining at absolute terms. Last year, EBITDA was about 303 crores.
Right.
That should exceed plus 400 crores this year.
And, before we move on to the other parts of your business, a final question from my end on the FGD opportunity itself. Is it a one-time opportunity, or is this recurring in terms of the potential that you're talking about?
No, actually, it is a one-time opportunity, you can say, because the total installed base of coal-based plant is plus 2 lakh megawatts. In that, 1,68,000 megawatt has been identified as a one-time retrofit.
Okay.
Afterwards, the regular FGD, any coal-based addition capacity is going to come down in the country as the years pass by because of the emission controls and all. Therefore, this cannot be a long-term opportunity, but it is a short-term good opportunity to do at business.
Okay, and you said 4,000 crores revenue and 400 crore EBITDA this year plus.
Yes.
But 11 to 12% margins would take your EBITDA closer to that 480, 500 crore mark. Is that?
No, I said about plus 400 crores it should be.
Okay, so both of them would be plus.
Blending and what are the product.
Okay, good that we have that clarity now. But apart from FDG, what are the other orders that you've gotten this year so far?
No, we are working on drinking water projects in Uttar Pradesh, about 4,200 crores. That is the part of the Jal Jeevan mission.
Okay.
And then we are working in operation maintenance of 39 plants across the country, including Adani. And that gives about 25% of our revenue. And then we are doing many of the power plant business in civil, structural, and mechanical works also. And then non-power we are doing in mining, infra, material handling, etc. And a lot of civil works we are doing also.
So what's the total order inflow in terms of value this year that you've gotten? How much are you targeting for this year? And while you talk about that, also tell us, what's your revenue and order book exposure to the government, be it the central government or the state governments?
Last year it was about plus 4,200 crores. This year we are already getting 6,163 crores, and the first quarter we have booked about 300 crores, and we are looking at opportunities of more than 15,000 crores. Maybe another 3,000 to 3,500 crores order booking is expected in this year.
Another 3,000 to 4,000 crores. So the total order inflow for this year should be around 10,000 crores.
Yeah, it should be near to that.
Around 10,000 crores. Okay, got it. A couple of questions. Then the O&M business, I think you briefly mentioned that it's around 25% of your business. So for this year, the O&M business could do around 1,000 crores?
Yeah, last year we did plus 800 crores, and then that should come to nearly 1,000 crores. And then one more aspect in the O&M is that we are developing one mine in the Jharkhand, Kotre Basantpur. That should be operational in the next 2 years. Once that comes, another 400 to 600 crores of O&M business should add to the O&M profile.
Okay.
And the government point, can you tell us a little about what's your revenue exposure from the government, both state and central?
Yeah, it is perhaps you can say 50%. 50% the government, both central and state governments, and then balance will be the private.
Okay, because the worry is that your trade receivables are close to 700 crores. That's almost 110 days, a little over 3 months, almost 4 months. Are the players paying on time? How do you receive the money earlier?
No, these receivables is part of our working capital management, and we are factoring in that. And in the market and this business, it is expected between 2.5 months to 3.5 months. That is a normal cycle time.
Okay. And what about working capital days? It came down, I think, to around 140, 145 days. It used to be 170, 180 days.
Yeah, that should be maintained because we are getting advances also in all these contracts. Here also, we are getting 10% of the interest pay advance. That should help us to service the working capital.
So 130, 140 days is the steady state working capital days that you're looking at?
Yeah.
That should be. Okay. And also, what about your net debt? Your interest cost per year is around 81 crores, at least for the past year. So what is the current net debt in the books? And do you need to, since you have such a big order book, do you need to raise some more money, or will you be able to function at these levels?
No, actually in these projects, it is a revenue-based working model because advances will be used. And we are also going to get the tie-up with the vendors and suppliers, and in-house we are doing it. Therefore, except for the materials, less of the working capital management we can do with in-house value addition, because we are putting our own groups, our own supervision, our own equipment, and then procurement, whatever is there. To that extent only it is required. Therefore, we will be able to manage that.
And what's the debt on your books?
About plus 400 crores.
Plus 400 crores, and that will be managed, right? And will you have to raise some capex, etc.?
No, capex, our type of investment is mainly for any construction equipment or capital assets. That is not much. About 25 crores we are planning in this year. That we should be able to manage with our internal resources.
All right. Final question, sir, before we let you go. The stock has seen a big run. The stock market seems to be sensing something. This order win is something that they like. Your stock is up close to 35 to 40% just in the last 1 month. So we need to clear most of the queries that investors or shareholders would like to ask. Is there any possibility that you're bringing in a strategic investor into the company, or does the promoter entity, have they received any kind of bids for the company? Could you clear the air on that front?
As on today, no. We are already having some investors in our regular IPP profile. And therefore, as on today, we don't see if anybody comes, we look into it separate.
But as of now, the company is not on the block.
Yeah.
And there is no political risk involved with the orders that you win as well, right?
These are all doable projects, and then drinking water substantial or plus 4,000 crores. That is a central project. Then others are revenue-based contracts. They're all ongoing projects. They are funded and then funds tied up. And this is also a part of the mandate Adani Group has to do it. Adani Group is pretty good in managing this type of projects, and they do in time also.
All right, we take that point. Yeah, we take that point because, the way there have been changes in a lot of state governments, etc. That's another thing that the street would have liked some clarity on. Thanks a lot for joining in and giving us all the details, Mr. Kodanda Ramaya. That's the management of Power Mech Projects. The stock up 5% today. But like Nigel pointed out, in the last 1 month or so, the stock has rallied over 40%, closer to 45%. Order wins coming their way. FDG is just one of them. The others are targeting almost 10,000 crores in this year itself. With that, we slip into a short break. And as we do that, here's a quick reminder for our viewers. It's that time of the year again. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth nearly.
Well, the Reserve Bank of India has released a discussion paper on the aspects relating to charges and payment systems and various payment instruments. Ritu Singh joins us to fill us in with more on that. Hey Ritu, morning.
Good Good morning. Well, yes, RBI has released this discussion paper on charges in payment systems. But importantly, Nigel, it has not really taken a stance on these just yet. What it has done is raised questions on a wide range of issues and sought public feedback on them by the 3rd of October. Broadly, these questions ask if digital payment charges should be market determined or regulator prescribed and how they can be made more transparent. Now, for instance, for funds transfers like your IMPS, RTGS and NEFT, RBI asks if charges should be prescribed by the regulator or if there should be a cap on IMPS charges and so on. Now, debit card is the only payment merchant instrument where RBI has intervened to bring down charges, and there it is seeking feedback on whether such intervention is required or if stakeholders can decide on the optimum level of MDR and interchange, and if RuPay should be treated differently from the rest. MDR is the fee that is paid by merchants.
All right, I think we've lost that audio from Ritu. Her point
As we
being
were
that,
swiping away.
yeah, as we were talking about the merchant discount rates, etc. But were that to happen, it would be a sentiment negative coming in for a lot of the credit card players. SBI Cards is the listed one. But Nigel, before we leave, I'm looking at Jubilant Foodworks. The stock is up 3% today. It's up 9% this week, and in this month itself, it's up what? 13.5% odd. So that's about Jubilant Foodworks, the stock that I'm looking at. The reason for that is perhaps, back in the day, this was an FII favorite. As of September, the FIIs held about 41% stake in the company. Then the FIIs started selling not just this stock, but the Indian markets as a whole. And the FII stake in the company as of June went to 29%. Now, the last 13 days, you and I have been tracking the way they put back the money. So are they going back to the old love or not is the big question. The stock is doing well over the last few trading sessions, so maybe some of that money is coming back.
Imagine FI is coming to bite into the pizza. It seems that's playing out. So good point there in terms of what Mangalam just said. For the time being, though, we'll just wrap up on the show with news that the Nifty is down close to 25 to around 30 points odd. The heartening fact, as we mentioned earlier, is there are more number of stocks that are advancing than declining. And the Nifty Bank had a bit of a consolidation phase just in the last couple of days. Well, that's back on the list, and that's up close to around 100 points odd. Wrap up on the show. Trading Hour comes up next.